of all, before starting the session, I want to congratulate all the people who have cleared their October 2023 paper of JIB. Congratulations, many congratulations to all of you. Now, those who are preparing for the May 2020, they have to start early. Why they have to start early? There are certain key takeaways that we have seen from the May paper. If I talk about the May 2023 paper, or either if I talk about October 2023 paper, in both the papers we there are certain things that have been changed by the IIBF. So that's what we are going to start today, the preparation for the May 2024. But before that, before moving forward to the session, do let me know in the comment section, is audio video both are you? Good morning, Sanju sir. So first let me know here, is audio and video both are okay? Are we good to go? So if we talk about the pattern of questions, the pattern of questions will remain the same. Another pattern will remain the same. Like the first pattern will be there, one-liner questions you will see in your paper. Apart from that one-liner question, you will find the match the following questions in the paper. You will find filling the blanks in the you will find the statement-based questions in the paper. And the last pattern of your is a case study. So these type of question have been seen. If we talk about the case study type of question, they will be seen maximum in the PP, principles and practices of banking, right? But all the other will be there in this IEIFS. If I talk about the maximum number of question can be statement based pattern, and that was lengthy. So there are certain things now lengthy. The paper is lengthy, and it's a time taking paper. It's a time taking paper, so we have to focus on the time management as well. Apart from that, they have made a language tricky. They have made the language a little tricky so that we will not be able to answer easy. So let's say for example, you have seen they are asking the question about the CRR. You know what is CRR, you know the concepts of CRR, you know everything about the CRR, but still some of the candidates were not able to answer the question. Reason, they got confused because of the language. They got confused because the tricky language or a little bit difficult language that they have presented. So that's why this is the main reason why we have to start early, because first we used to say to all of you, focus on the conceptual understanding. It's still very important. Without concepts you won't be able to qualify the paper, but with the concepts we have to work on the language as well, because we have got the feedback from the bankers that they know about the paper, they know about what have been asked in the paper, but somehow they were very confused about which will be the right answer. The reason behind was the language. So we have to work on the concepts as well as the language of the question. Okay, but you do not have to worry about, because everything that will be coming in your paper, that will be from the book. The language of the book will be used, but it will be made a little tricky only. Okay, that's why we have to start early, and that's why from today onwards, this is our first class for May 2024 paper. So this is our first class for May 2024 paper. For today onwards, we will be completing unit wise back to basic. As you can see, we are talking about concepts, plus what we have to do, we have to focus on the language as well. So back to basics will help you cover the concept as well as to understand the language of the questions, the language of the paper. Because when you talk about the language is not the thing that you have to focus on. The language become tricky by using the concept. And they use the concept, they have molded the concept, and then they were asking the questions. So concepts have been molded in a difficult language that they are asking. So that's why back to basics we have started for your IEIFS from today onwards, in which we will be discussing all the type of questions, all the units, all the units practice and the concepts. Okay, but obviously in a small pattern, in a small way. So in today's session, we are going to start with the first unit of your an overview of Indian. And this is our class first. Okay. So let's just start before going forward with the class. You can see that there is a four modules in your syllabus, and these four modules complete your IE IFS subject. First of all, module A and B have been a part of your Indian economy, and the modules C and D is a part of your Indian financial. In the Indian financial system, it means in the C and D module, you only have to focus on the concepts of the topics of your units. Another concepts is everything in the C and D module. In Indian economy part, you have to cover the concepts, but with the concepts, you also have to focus on the data that you have to memorize, that you have to mug up. I can the data you have to mug up by yourself, but the concepts you have to understand. Indian economy is nothing if you're not able to understand the concept. All the chapters of the Indian economy will be interlinked and they all will be dependent to each other by the form of concepts understanding. That's what we have to do. Concepts plus data you have to remember in the Indian economy module, and the Indian financial system you have to focus on the concepts. So let's just start. This is whole syllabus of your Indian economy and Indian financial system. Today I will be discussing about module A, unit number 1, that is talking about an overview of Indian economy. Okay, in this we are going to understand what actually the economy is and what actually the situation of Indian economy is. Because we are covering back to basics. That will definitely be helping you out to understand the economy and the syllabus as well as the concept. So let's start. So we are going to talk about the economy today. Okay, if you are talking about Indian economy, let's first understand what actually the economy is. If you are studying Indian economy, so you have to understand what actually the economy is. So there are two terms in front of us which I am writing. The first one is economy and the second one is economics. Those candidates who have joined me here, do let me know in the comment section that these two terms are same or different. Are they same or the different? Let me know. If I'm talking about Indian economy, if I'm talking about economics, is these two terms are similar or they are different? Let me know. Okay. So if we talk about the Indian economy or economics, so if we talk about these term economy and economics, they both are different. How they are different? They are different because, first of all, if we talk about economics, we have studied economics always as a subject. And when you study the economics, when you know this term, when you read this term, this relate to the subject. It means it is a subject, and if it's a subject, we will be studying something in the subject. So what we are studying? We are studying the economy. So the study of economy is known as your economics. Study of now what actually the economy is. Economy is simply a system. Economy is simply a system in which the production and as well as the consumption of goods and services will be the production, distribution, and consumption of goods and services will be done, and this will be known as your economy. And when you study the system, this is known as economics. Now, what is the need of studying this? What is the need that you have to study the production, distribution, and consumption of goods and services? Because in every economy, you will find that the resources will be limited. There is a scarcity of resources, a scarcity of limited. It means the resources are available to you but not comparable to the unlimited needs and wants of the people. So needs and wants of the people will always be higher in comparison to the available resources with you. So how to make these particular two things equal to each other so that the need and want of the people will be fulfilled? So simply, scarcity of resources is there, and we have a unlimited needs and wants to fulfill with the help of this scarcity of resources. So somehow you have to find out a way by which you will be doing the management between these two, between the needs and wants of the people and the resource. So this management you have to do between these terms, and that's why you have to study the system. If you are not able to understand how many products you have, how you distribute them, what consumption people are doing, how you will be able to find out the pattern to allocate the resources that will be fulfilling maximum needs of the people. So simply you have to allocate your scarce resources in such a way that it will be fulfilling maximum people's needs and wants. And that's where we find out the economics to study. Okay, that's where the economics helps you out because it covers certain theories, certain principles that helps us to fulfill or to match the level of needs and wants of the people with the resources. Okay, and that's why we are studying the. So now this is economics have been divided into two branches. The first branch is microeconomics and the second branch is macroeconomics. So this difference have been introduced by Mr. Ragnar Fritsch in the 1930s. Mr. Ragnar Fritsch has divided the economy into two branches, that is microeconomics and macroeconomics. Now the microeconomics talks about the individual unit. It is study. So whenever you are doing a study of individual, that will be known as your microeconomics. When you are doing a study of whole economy, when you are doing a study of whole economy, that will be known as your macroeconomics. Like for example, in this particular class we have 21 students. Out of these 21 students, if I am talking about the needs and wants of only and only, let's say for example, Sanju ma'am, in that situation, that will be a micro study. That's a micro study because I am studying the needs and wants of one people, an individual. So when you study individual person, individual company, individual unit, that is a micro study. And when I'm going to study this needs and wants of all the 21 people who are in the class, that will be known as your macro. That will be known as what? Macroeconomics. So this is the only difference between the two branches of. Okay, and the need we have seen because there is a difference between the resources and needs. That's why we have to study economy. Okay, so after studying, what we are doing, we are making sure that this limited scarce resources will be able to fulfill this unlimited needs. Okay, so the economic problem. What is the economic problem we have? Economic problem is that to match the limited resource with the unlimited wants. So this is what we are doing in the economics. We study the economy to find out the pattern, to find out the way to allocate our resources to fulfill our needs in the different sectors of the people, and like unlimited needs of the people. That's what we are doing in the economy. Now, if we talk about the definition of economics, it's very simple that we have discussed here. Allocation of your scarce resources. Scarce means limited resources of an economy according to our priority in order to satisfy the needs and the wants of individual as well as the society. Simply after studying the economy, what you are doing in the economics? In the economics, you are finding out the way of allocating the resources so that you will be able to satisfy the needs and wants of the population. That's what actually the economics. And this term have been taken from a Greek language, and that term is oikonomikos. Oikonomikos is a Greek word that means household management. It have been introduced by introducing two terms, that is oikos and nemen. These are the two terms that have created oikonomikos, which means management of household. So similarly, when you are managing your household, that is oikonomikos in the Greek, and that's where the economics comes in the picture. So economics is what? Management of your household, management of your nation. What management you are doing? You are doing the management between the limited resources and the unlimited needs and wants of the population. Economics comes from a Greek word that is oikonomikos. You can call it a oikonomia. It typically translates to the task of managing a household. Because in every household, you will find out that the family needs are more in comparison to what the family actually have. And that's what we're talking about here in the oikonomikos. And the same thing apply to the economics. Now, the economics have been divided into two branches by Mr. Ragnar Fritsch. There's two types here, macroeconomics and microeconomics. It was done in the 19th. Okay, these are the two branches of the economics, micro and macro. Now, in the overview of Indian economy, if we talk about it, it starts with the evolution of Indian. Now, how Indian economy evolved. So it's a very simple example. If I take, let's say, evolution means what? How you have evolved, how you have been increasing your worth in the economy, worth in the. Well, if we talk about the market you like market is a big part of economy of any economy. So how the marketing evolved. Earlier we used to have a seller oriented market. Seller oriented market means it means we do not had choice in the market. Whatever the seller have produced, whatever the seller have provided to us, that we have, and that's it. We did not have any choice at the time. But now the seller oriented market have been converted or have been shifted to the consumer oriented market. Now what does it mean? The consumer oriented market simply means we are focusing on the consumer, what the consumer wants, what are the needs of the consumer, which thing will satisfy the need of the consumer. So the market totally shifted to the consumer's need. And now we are the king of the market because we are running the market in the. So this is how the market evolves. If I talk about the Indian economy have a certain phase. The first phase is pre, like before we got the independence, what kind of economy we have. And during the independence, at the time of independence, what happened? It means 1947 year, what happened? Okay, then we have a post-independence period. We have a post-independence. So these are the three major periods who have evolved the Indian economy. As you know, before independence, we used to be under the Britishers, and the Britishers somehow took a lot of advantage of the not only of the labor but as well as for the wealth, raw material, everything. They have used everything which we used to have in our country. So that was the pre and post difference. After that, the certain events have been in the Indian economy that have changed the evolution. The first event we can talk about is LPG, liberalization, privatization, liberalization that happened in 1991. The second major event that we have seen, that's a global financial crisis 2007 and 8. And the latest one we have a COVID-19. So these three events have a lot of impact on the evolution of the Indian economy, and that's how we have to study this by studying it in the phases that are available. Okay, so let's start. First of all, this is a very famous name when it comes to the evolution of Angus Madison. So he have given us a certain data after studying the economy that India and China used to contribute half of the global GDP. In the 1080 AD, India and China used to have 50.5% of the global GDP. That was computed in 1990 in form of dollar and purchasing power parity. So this is what we're talking about in 1080. We have 50.5% of global GDP contribution from India and China. And in the 1600 AD, this contribution from these two countries have been increased to China used to contribute 29%, India used to contribute 23%. So this was the contribution by India and China in the global GDP of the world. Okay, now apart from that, there is certain one more important thing that a century later, in the China's share to the was started declining, and India's share to the GDP started increasing, and India used to contribute 4.4% of world output. Now, these are the data I was talking about that in the module A and B you have to study. These are the data. Like in 1080, what was the contribution? 1680, what was the contribution? And how much increase of the India's contribution in the world output have been. So these are the data that you have to study in the module A and B. Now, apart from that, we have seen then by 1820, India's share had plummeted to 16.1%. So at the time, Britishers were ruling, they were governing our country. Our contribution to world output have been, and according to IMF, International Monetary Fund, what is it? It's an international organization that helps out its member countries in the situation of economic crisis. If your country is facing economic crisis, the IMF will provide you the loan to overcome that kind of crisis. Okay. So according to IMF, India used to contribute 7.3% in the global GDP. That was in the year 2020. You can see the contribution to the GDP of India have been declined since the independence period or after the independence. Now, if I talk about India became third largest, India is at the third rank in context to the GDP purchasing power in the world after only US. So India's rank in the GDP purchasing power parity contribution in the world is third. So this is also the data that is important you have to remember. Like what is the rank of India in context of the GDP purchasing power parity world? So it is third, the first is, second is China. So this is what you have to study. Okay, now apart from that, a major question. In the May 2023, we have seen question from this particular topic. In October 2023, we have seen the question from this. And this topic is related to the characteristics of Indian economy. Simply, the World Bank, that's an international organization that helps out its member countries poverty, reconstruction, redevelopment situation. So World Bank has classifies economies in four categories. How many categories World Bank have given? World Bank have given the four categories as per the per capita income of the country. So what is per capita income? It's simply an average income of an average income. So how to calculate the per capita income? The national income will be divided by the total. The per capita income shows that how much earning you are doing, and how much earning you are doing in the country. That's the average income of an individual person. And if I talk about the first per capita income of India, that was only 20 rupees per person. This was the first per capita income have calculated in the 1870, and this was calculated by Dadabhai Naroji. It was calculated by whom? It was calculated by the Dadabhai Naroji. He calculated the first per capita income of our country, and that was your 20 rupees per person. Okay. Now, next, the economics per capita income have four categories as per the World Bank. The first category is low income, the second category is lower middle income, the third category is upper middle income, and the fourth is higher income. So lower middle income is the category of Indian economy. So as per World Bank per capita income criteria, India comes under the lower middle income country. So we have seen in context to the GDP per cap purchasing power parity, India's rank is third, but when it comes to the per capita income, India's rank is very low, and India comes under the lower middle income. And to come under the lower middle income category, you have to have a per capita income under the range of $996 and $3,895. And what actually India stands at? India stands at the 1,008. So that's why India comes under the category of lower middle. Okay. So this is a very important slide. Definitely one or two question will be seen in the May 2024 as well. Now, Indian economy is at the third rank in context to the purchasing power parity. In context to per capita income, India's rank is very low. Now, this is also very important. One of the question can be asked from. Like when your country have a low per capita, what it can mainly attribute. So it can first attribute to high level of poverty. It will increase the poverty in your country if you have a low per capita. It will increase unemployment in your country if you have a low per capita. It will also increase illiteracy in the country if you have a low per capita income. Having a low per capita income simply means people do not have a money supply, they have a less money. If they have a less money supply, they will be more poor. And there will be a less of job available for the people. So unemployment will be as well as high. And if you do not have money, how you will your living standard, you will be illiterate. So when you do not have high per capita income, it means you do not have money. If you do not have money, these three situations definitely will be wrong. Now, next. One statement based question can be asked from this particular slide. Statement based question can be asked from the slide. And the question can be like, which of the following factor is are correct in context to influencing nature and characteristic of Indian. So these are the factor which influence the nature and the characteristics of our Indian. The first is you can see low per capita income we have, rapid population growth we have. These two are correct because if you remember in January 2020, India became the most populous country. It used to be China, but now we became the most populous country in the world. You can see per capita income is decreasing, but the population is increasing. And we have a high rate of unemployment. We have a high rate of underemployment. Underemployment means when you have to settle down for the less. And you have to settle down for the less from actually which you belongs to or which you actually capable of. And when the people have to settle down for the less job opportunity in comparison to what they actually belongs to, that is known as underemployment. And disguised unemployment means it means when you have a surplus manpower. It means you needed only, let's say, for example, 5 laborers to perform a certain task, but you hired the 10 laborers. So the remaining 5 laborers will be your surplus manpower. If you remove them, if you provide them holiday, doesn't it will not impact your production, your productivity of the company because they are the surplus man. They are not doing anything in in your business. That's what surplus man. Now, the Indian economy is majorly dependent on the primary sector. Excessive reliance we have on primary sector, that's the agriculture sector of the country. Now, you can see poverty is rising, unemployment is rising. So these are the 6 factors which influence the nature and characteristics. And this particular slide can be asked in a form of a now. So before moving forward, before coming up with the questions, discussing questions, let me know is everything which I have discussed till now is clear to all of you. So every day we will be taking one topic, and on that particular topic will be covering the theory. It means we will be covering the concept of the topic, and then in the end of the session we will be practicing the questions of that particular. So let me know in the comment section. Is whatever we have discussed till now is clear to all of you? Yes or no? So if it is clear to all of you, you will be easily able to answer the questions. As you can see, the first question is talking about the World Bank. The first question is talking about what? It is talking about the World Bank. World Bank classifies the economies considering per capita income. There are 4 categories. How many categories are there? 4 categories. That is low income, lower middle income, upper middle income, and higher income. And Indian economy falls under which category of World Bank? That you have to answer. Like so A, B, C, or D, which of the following is the right answer for this question? Also, those candidates who have joined the session, who are watching us live, be very active in the session. because if you being active in the sessions will be definitely much more interesting. So let me know which of the following will be the answer. So we have just discussed that there is a range of per capita income. है ना? There is a range of per capita income that have been defined by the World Bank. Accordingly, your category of the economy will be decided. So India comes under, very good Sudha ma'am. India comes under the lower middle income category because India's per capita income is $1,080. India comes under the second category. Okay. Now the next question is, the low per capita income is mainly attributed to high level of what? So if there is a low per capita income in your country, out of these options, which will be the high level patient of the country? Poverty, unemployment, illiteracy, poverty, employment, illiteracy, poverty, unemployment, literacy, or the fourth one is poverty, employment, literacy. So you know, if you have a low per capita income, it means you have a less money supply in the, and if you have a less money supply in the country, what impact you will see in the economy out of these four options? A, B, C, or D. Which situation will we see? So if you say that employment will increase, obviously not, because you do not have money, you won't divide, you won't asking for more goods and services. If you do not asking for goods and services, production will not be done. If the production will not be done, it means job will not, will have a more literacy. No. You don't have money, so you won't be able to invest in your. So the right answer will be obviously your A option. The poverty will, unemployment will increase, illiteracy will increase. The right answer is your A. Okay. Next we have contribution of which sector is maximum to the Indian economy. Which sector is contributing maximum to the primary sector, that's the agriculture sector of country, sector, that's the industrial sector, and the third one is tertiary sector, that's the service sector. So out of these four options, which actually is the maximum contribution? So if you have seen the nature and characteristics which we have discussed, so we talked about that primary sector is the sector which on which we have a agriculture sector. But we are not asking about in which sector you are dependent. We are asking the contribution, the maximum contribution of the sector. So the maximum contribution of the sector in primary sector is the sector which provides the maximum employment in the country, around 49. But when it comes to the income contribution, around 52% contribution, national income comes from the tertiary sector. Okay, so right answer is maximum. In national income contribution, the tertiary sector is maximum. Now, as per Mr. Angus Madison database, India's share to global GDP was dash in 1600. So, what was India's share? Let me know which of the following is true. So, if we talk about at the time of independence, we have seen only 3% contribution was there from India in the global GDP. So, at the 1680, it was how much? Very good. It was C option, that is 23%. The year in the 1680, India used to contribute 23% in the global GDP. And at the time of independence, India only used to contribute 3% to global GDP, because the raw material, the money, capital, everything have been taken by the Britishers to their country. That's why India's contribution to the global GDP was decreased. Okay? Right answer is next question. According to Mr. Madison database, India China contribute dash of global GDP in 1000. So do remember we have discussed two datas. One was in the 1080, one was with the 16. So here the question is asking about 1080, the contribution from India and China in the global GDP. And in the 1680, this is also you have to remember that was 52%. In the 1600, both the countries are contributing percent, but in the 1080, it was how much? 40.5, 45.5, 50.5, or 55.5. Correct. Again, a C option, that is 50.5. India and China was contributing 50.5 in 1000 AD, and in 1600 AD they were contributing percent to the global. After this, after 1600 AD, we have seen the China share was decreasing and India. Morning, everyone. Welcome to the official YouTube channel of Office of Data 21. How are you? So, as you know, we have started a back to basics for the May 2020. This is our second class regarding this, and in today's session, we are going to do the overview of economy part 2. It means this is the second class of our unit 1 module. Okay. So, before starting the session, as I today as well, that what we are going to do in this particular, we are going to cover the basics of IEIF from a very important concepts, all the important concepts which are required to understand to this particular syllabus. We are going to cover that. And this session will be regular on Office Hours 24/7 in the morning at 7:30. And in this session, what we are actually going to do, we are actually going to discuss each and every topic with the conceptual understanding, and also we are going to practice certain questions on those particular concepts. Okay, because in the May 2023 and October 2023 paper, we have seen situation that something have been changed by the IIB on the regular basis. Something have been changed by the IIB, so they are changing a pattern, the way of asking the question. Apart from that, they can change the language of the paper. So accordingly, preparing ourselves 2020. Okay, so let's start the session. Before moving forward, do let me know in the comment section, is audio and video both are okay? Are we good to go? Okay. Apart from that, if you are new to the channel of Office Asara 24/7, then subscribe the channel and press the bell icon so that upcoming sessions notification. Now, as I have told you that this particular subject have four modules and D. It covers the whole syllabus of IEIFS. The starting two modules belongs to the economy part, in which you have to cover a certain data with the theory and conceptual understanding. The second part will be C and D, that is the financial, that will be covering the concepts of you topics. This is what we are discussing here. So let's start. Today we are going to cover the Unit 1 overview of Indian Economy Class 2. That is the first unit of your module. And in this particular unit, in the yesterday class, we have discussed the certain evolution of Indian economy, the certain points related to the evolution of Indian economy that we are going to continue today as well. So India was an agriculture economy and with a very low per capita income. So if I talk about, if there is a low per capita income, that is going to impact the economy, because if the low per capita income, what happened, it means the people do not have money supply, they do not have money, they do not have money. It's very obvious they are not going to demand more services. When they are not demanding goods, the production of country will be reduced. If the production is reduced, the GDP, and if there is no production, that's very obvious the employment level will decrease and the per capita income. So this is how you can see that in the economy the crisis can be, there is a low per capita income. So that's what we do not want. We want India to grow. We want India's GDP rise. We want per capita income. And for that, we are doing economic planning since 19. Now, apart from that, as you can see, India was an agricultural. If you want to call any economy a particular sector-based economy have to fulfill. The first condition should be that the country income should come from that particular sector, that should be, if you want to call India an agricultural economy, the 50% national income of the country come from the agriculture. Apart from that, the second condition is that the employment generation should also be from the same sector, and that should be the same minimum 50. If a particular sector helps you to generate the national income minimum 50% and also provide employment to your population minimum 50, then that particular economy will be known as agricultural economy. You can call it a service based economy or you can call it an industry based. But these two conditions have to be, so do remember that. Right now, we cannot call India an agriculture based economy. We cannot call India a service based economy or an industry based economy. Because if I talk about the income, we are getting the income maximum from the tertiary sector, and sorry, around 52% income we are getting from the tertiary sector, and that is also known as what service sector. Now, if I talk about the employment generation we are getting from the agriculture sector, that is the primary sector means agriculture sector is providing around 49% of maximum employment generation in the country in context to the three sectors of the. So we cannot call India a agriculture based economy nor an service based. Okay, so do remember these two conditions have to be fulfilled if you are calling an economy a particular sector based. Now, what have been seen after independence, continuously agriculture's contribution started declining and the industry and service sector contribution started in. So you can see in 1950, agriculture was the dominant sector, was the controlling sector, and it used to contribute 53.1% of GDP. Industry sector used to contribute 16.6, service sector used to contribute 30. You can see agriculture was dominating the economy at the time of 1950. And this is the year 1950 when we started economic planning as well. So economic planning in 19 started by the planning committee, which used to make the 5 year. It was started by the planning committee 5 year. Now next important thing is that till the year 1981, the agriculture sector was surpassed by the, so in 1888, 1981, the service sector contribution increased and that raised the 38% of the GDP. Agriculture stays at the second level or that was the 36.1%, become the largest contributors of India's GDP. The service sector has surpassed the agriculture. And then that industry sector was there, that is 5.9%. Means since 1981, the national income have the maximum proportion of income from the tertiary sector, that the service sector. Then after that, the secondary sector and the last one will be a primary sector. So this is the contribution to the Indian economy right now from the different sectors of the economy. And these sectors have been divided by C. Central Statistical Office was the government of India's unit that was created to calculate the national income, inflation, employment, unemployment, GDP, etc. All the statistical data of the country. So CSO have divided economy in three categories, the three sectors I can say, to calculate the national income, and those sectors were primary sector, secondary sector, and the tertiary. These three sectors have been divided by, it was divided by the CSO, Central Statistical Office. Okay? Now do remember earlier agriculture used the dominant country, now it is service sector. Okay. Apart from that, we have also seen that only less than one sixth of Indians were literate at that. So what happened, if you remember yesterday's session, we have discussed the British era in the last session. In British era, we have seen how Britishers used to exploit the raw material, they used to exploit the labor. They used to drain the wealth from India to abroad. They used to taking money from, it means in the Britain or UK we can. So this was happening in the country. Apart from that, it was one more thing that the Britishers helped us to develop the railway sector, but not for the development of the country, not for the industrialization of India. They have done this particular development just to transfer the raw material from India to Britain. They have done everything, get benefits for themselves, and that's what literacy also happened in the same scenario. What they have done, they have simply got to introduce the Britain, or we can say British education system. So they have seen there are certain Indians who are focusing on the British culture. They wanted the British culture. And there were certain Indians who are very obsessed about English and all. So what they have done, they have targeted those Indians who are focusing on or who wants to get to know the British culture. So accordingly, education system they have introduced, and they focused only that population who wanted to convert them, not to convert themselves, but yes, they wanted to have the proper literacy in the context of the British education system. That's why we have seen only one sixth of Indians were only literate at that time. Okay, now the next thing is Dadabhai Naroji in 1867, 67, 67, 68. If you remember, I have told you yesterday as well that the per capita income was calculated by the Dadabhai Naroji for the first time. It was 20 rupees per person. What was the national per capita income? 20 rupees per person. Dadabhai Naroji published the first estimate of national income in his book. That book was named as a Poverty and Un-British Rules. Yeah, in this book, he also have defined the drain wealth theory. He also have defined the drain wealth theory. Now, what's a drain wealth theory? Drain wealth theory, let's understand this by an example. So, if you remember that in our country, the scientists, doctors, yeah, for IITians, they mainly are working in the other country. They move to abroad. So they have a such kind of brainwash that there is no such kind of job for us in India. We have to shift abroad because we have a higher education and no such kind of posts are available in the country. So this is known as a brain drain. So their brain have been drained, their brain have been washed, that nothing is there for us in the India and they move to abroad. Similarly, drain wealth theory was representing that the wealth of the country was drained by the British India to from India to Britain. Okay, that was the drain well theory that have been represented by Dadabhai Naroji. And with the help of this theory, he also explained us the first national income, first time national income and the per capita. So the person who introduced the national income estimates, who introduced the per capita income estimates in the country for the first time was Dadabhai Naroji, and Dadabhai Naroji was the first Indian who became the uh, elected member of British Parliament. Okay, what he have became? He became the uh, first Indian member he was who became the elected member of British Parliament. And by knowing the national income and importance of national income and per capita income at the British Parliament, he introduced the same in the country. Now, a certain introduction have been or certain data have been given by Dadabhai Naroji in the year 1867-68 when he have calculated the national income and per capita income. The first national income of country was 340 crores and the first per capita income for the country was 20 rupees per person. So this was the data in the year 1867-68 calculated by the Adda analogy for the national income and per capita income. And I have told you per capita income is nothing, just an average of national income. How to calculate? Just divide the national income with the total population. We will be getting the per capita income. Also, do remember, if there is a low per capita income in the country, the poverty, the unemployment, and the illiteracy rate is going to rise. Okay. Now, a very important data. India's share in global income, or you can call India's share in global GDP, was 23% at the time of 1600, and the same only remained 3% in the time of 1947. It means at the time of independence. So you can see India's contribution to the global GDP or the global income used to be 23%, that have been shrunk 3% in 1947. The same, if we talk about the global trade, India's contribution to the global trade used to be 33% in 1600 AD, but at the time of independence, it shrank to only 3%. So India's contribution was declining continuously in the global GDP and global trade, because we know the Britishers have taken the wealth, the Britishers was taken the raw material as well. So they have developed the railways so that they will be finding a way to take the raw material from India to abroad to their country. So that's why India's share to the GDP and India's share to the trade have been reduced or have been declined. Okay, next. Now this is the duration when we have seen the evolution. The British era was there, in which the early British period 1600 to 1757 was seen. From 1757 to 1857, then we have found the British Crown 1858 and onward. And then we got independence in 1947, we got post-independence, we got economic reform period, got global financial crisis period, and now we are in the post-COVID-19 pandemic period. So these are the duration in which the evolution of Indian economy have been seen since British era till the post COVID-19 pandemic. Okay, so these are the evolution of Indian economy. Now in this evolution, Mr. Madison have given us a certain important data. So we have discussed a certain important data given by him in the yesterday class also. Do remember all those data, they are very important. Now, according to Mr. Madison, we have seen that he used around 27,000 pounds in a year from India for himself as a jagir. It means, simply, if we talk about clean, he used to take money from India to abroad. It means take for himself as a jagir the amount of 27,000 pounds in. Similarly, if we talk about the salaries, the British salaries were very high at that time, and the viceroys used to receive 25,000 pounds in, and the governors used 10,000 pounds in. That was the salaries of Britishers when they were ruling us. Apart from that, the difference between income of a Indian labor and the labor of British have seen that the starting salary of engineering services used to be the 420 pound a year, that was 3 times what the actual Indian labor force was getting. You can see the difference here. The difference was seen that the basic engineering services used to get 420 pounds in a year. That was 60 times more in comparison to India. And that have created a huge difference between income or increase India's income or GDP or contribution to the global level, and the income increase for the Britain or the GDP and their contribution at the global. And the data have been represented to us here in this particular chapter, like how much Increase in India's income or India's GDP happens in the period when the Britishers were in the country, or we can call it a British era. And the same time, we have seen the income and trade of the Britishers. So the money they used to take from India to abroad, that was represented as a home charges. But taking monies from 1858 to 1947 as their salaries. They used to take this money as their salaries. That was the private remittances from India to UK that have been represented as a home charges. And this is also one of the important point of this chapter on the home charges. We have seen the questions 2020 as well as in October 2020. So this is home charges is also important for the paper. Now, if we talk about increase in the per capita income for India between the period of 1800 to 1947, it was seen only 12%. Only 12% per capita income of India was increased, while in comparison to Britain, if we talk about the Britain, have increased 55% of their per capita. So you can easily see the gap here that India was only able to increase 12% of per capita income, and the Britain has increased its per capita income by 55%. The same thing have been seen in the GDP as well. India's GDP was increased 0.44 times, while the Britain's GDP was raised by 50 times. So this was the gap we have seen in the development of both the countries, and the reason behind it, the exploitations of the Indian labor, the exploitation of the raw material, and the drained wealth from the country. These are the three main reasons because of which this huge gap have been in the per capita income and the GDP increment in both. So this is also important data. Do remember this comparison between the two countries will be 1600 to 1947, the year we got the independence. Now the next important evolution have been seen in the Indian economy was the sixth five-year plan. So if you remember the Hindu rate of growth we have discussed, this Hindu rate of growth was introduced by Raj Krishna. He has given us this particular rate as a slow rate of growth indicator. Slow rate of growth indicator. So Hindu rate of growth was actually a slow rate of growth that have seen around average 3.5%. So when there is an average 3.5% growth, that was represented as the Hindu rate of growth by Mr. Raj Krishna. But in the year 1980 to 85, that was the sixth five-year plan of our country, and the five-year planning was done by the Planning Commission. At that time, we have seen that the skirts on the Indian economy have been broke because now we were able to grow more. We were having around 6% of growth. That's why the Hindu growth was continued after the sixth five-year plan of the Planning Commission. And do remember, Hindu rate of growth used to represent the slow rate of growth that was around average 3.5%, and this term was coined by Mr. Raj Krishna. Now, from 2008 to 2021, in 2007 and 8, we have seen the global financial crisis that was the Lehman collapse, you can call it. So that have been seen in the 2007 and 8 because of which the Indian government have been provided a fiscal stimulus to us. Simply, we can say to reduce the impact of the global financial crisis. So in this particular thing, what government have done actually, the government have released a certain fund. Government have released a certain fund to make sure that the global financial crisis impact will not be. And if it is there, and the same thing have been done by RBI. RBI have created the easy monetary policy. So I hope you all know about the monetary policy. What actually the monetary policy formulated by Reserve Bank of India to control the price stability in the country. So by making easy monetary policy, RBI has reduced the interest rate in the country. When the interest rate have been reduced, the loans will become very cheaper for the public and they will be taking more and more loans that will be money supply in the country. And this have been seen in the economy. Like government have released a certain fund, RBI also released certain so that there will be no what we can call it like there will be a proper money supply available with the public so that no crisis will be seen because if there is a less money supply it's very obvious people will demand less goods and services, production of goods and services, and it will decrease the of the country as well. So the government did not want to have this, that's why the fund have been released. So with the help of these two steps taken by RBI and government of India, we have reduced the impact of global financial crisis on, but it was done on the expense of fiscal deficit. Was done on the expense of what? On the expense of fiscal deficit. So government have released the fund that government have borrowed from somewhere. The borrowing on the government of India, the burden on the government of India have been increased of the borrowing fund. And that somehow created a lot of issue for the country because the fiscal deficit have been, the government have a burden of the money that the government have to return to the party from the government have taken. And after seeing that, FRBM Act were became active again. What is FRBM Act? Fiscal Responsibility Budget Management Act. This act was introduced in 2003 and became effective in 2004. And this FRBM Act was focusing on reducing fiscal deficit or making fiscal deficit zero in the FRBM Act became active. Whether all the targets till now, whatever taken by the FRBM, have not been achieved, but still it is working in the direction to reduce or to eliminate the fiscal deficit from the country. That rise because of these two reasons that have been done by government and RBI to control the impact of global. Since then till now, the fiscal deficit is out of the order for the government of India. So to make sure that the country will not face a lot more issues because of these, the government of India has introduced certain revolutionary policy fact of the fiscal deficit as well as we can say to control the government's fiscal deficit situation or to control or to provide the subsidy or the subsidy government for the fiscal. So after the release of the fund, we have seen the current account deficit was also in. What is the current account deficit? It is simply the difference between an import. When the imports are more than the it represents the current account deficit. What happened? The government and RBI have provided fund to the country and people started demanding goods and services. When they were demanding goods and services, we have to import those goods and services from the foreign countries because we did not have the proper supply in the country and that increased the imports in the country and exports and that led to increase in the current account deficit. What is current account deficit? Simply when the imports are more than the export. Now to control all these situations, the government of India have introduced the GST goods and service tax. Government of India has introduced insolvency and bankruptcy code 2006. The corporate tax have been cut, the demonetization have been done. All these are known as the revolutionary policies by the government, fact of the fiscal deficit, or we can say to control the situation, financial situation of the country. So out of this, one revolutionary policy was FRBM Act was also, which was actually helping out or is still helping out government of India to reduce deficit.